Hey everyone, welcome to your daily update for Sol and BTC. Do not forget to like and subscribe and put things in the comments, etc. Help this algo get the news out there. It's very the last 4 weeks have been definitely a testing time for attention span. We've pretty much just spent every single week with a bit of a move to the up, a bit of the move to the down, and then we just come back to the middle again because we're just stuck between a trend and high time frame resistance. So every time we're sort of right on the cusp of getting a decent close that could give us a bit more of a sustainable break up or break down, the price tends to either just get sold up or down just before the candle closes, which we had a pretty good example of that a couple of days ago when within 34 minutes of close it got bought down under 89, and obviously down we go. We end up taking what could have been support and keeping it as resistance. So liquidity over the weekend's pretty even. We've been sideways enough, that it's just building up pretty evenly, top and bottom. A little bit more bias to the top, but not enough to really show that there's been any major action. Sol is a bit of a gap, around the current price, which is odd to see. I guess people are starting to just not bother. But yeah, we'll have a look at these charts and see what they have to say. So looking first at Sol BTC on the daily, it looks very much at the moment like we're just hovering on the trend. Now, this could mean more bearish things to come. What happened yesterday was they pushed the price down just under this 1618 level. It gave us that close that we didn't want, rejected off the range level, and now it's pushing down and it's trying to break the trend. So you don't really just break trends by pushing the candles straight through them. What normally happens is you need time, so therefore it's sideways. So you bring the price down to it, you sit close enough to it, just under it, just over it. Doesn't really matter whether it's under or over, it's usually about where does the next candle open. And in this case, if it goes exactly here, it'll open on top of the trend again. And that means you could then get a push up tomorrow. If it comes down just a tiny amount, then it opens on the other side of it, and then comes down from there. It's why it's very hard to sort of tell people in these videos, do you long at this moment, do you short at this moment? I know it's what everyone kind of wants to know, but you don't actually know the answer to that until it closes, and and they can change it because they were always so close to the levels around the time of close. They can change it in the last minute if they want to. So at the moment, I just put it as if it was really bullish, it wouldn't be hanging around here, but it could still have an okay close. But yeah, anything on the underside of that trend, it will then use the reverse of the trend to try and break down further. And that's when we start to run into things like origin support levels, and the level that's down here at 12094. That one hasn't been tested yet since creation, so that's the kind of level that could actually create a bit of a bounce back to the upside. And at that price point, it wouldn't actually be anything more than just a local low of an uptrend. Like if we just roughly look at these highs and lows, if you were to come down and hit this origin down here, not to say it does this because you can't see that far ahead in the future, but it would just be trending. So that's probably an area just to watch out for. See if we start to get a bullish shift and Sol BTC's down in that area. So weekly, you really want, if things are going to change, you really want them to change pretty soon because you don't want this to be inside the weekly hold. So any kind of close under 12515 is definitely bearish. Closes under 12239 for the week, even more bearish. And if this thing goes on an absolute nosedive and ends up creating a downwards range by closing under 11918 for the week, that's really bearish. Like expect big drops in the strength of Sol at that point. Even if BTC was to maintain a sideways price action, if this thing creates a range to the downside on the weekly, it's not looking good for Sol. Right, let's have a look at the safety assets. So some pretty big mixed messages here. You've got Sol looking hard. It is right, they're looking at closing either just above or just below a trend. So, but when we come across and have a look at the safety assets, we're currently looking at a blue candle below the support trend, possibly creating a hold off this doji, but I really do not like holds based off dojis. Yeah, it's already an indecisive candle as it is, so trying to say that they're going to make a range off it, it's like saying they might make a range off a candle that might be able to create a range or something along those lines. But yeah, it's definitely, if it closes to the downside, you'd have to say, okay, yes, it may have another down day. But from the looks of it, what it has done is it's actually flipped a prior broken trend into support. So I still wouldn't be overly bullish on risk assets until this thing actually really starts to show some decent, candles. As you can see, it's just been weeks of real indecisive, or days of real indecisive action there. Looking at the weekly, so the weekly's a bit clearer. We had a downside hold made. We did a push to the downside. We've pushed back up. What we don't want to be doing, if we want any kind of bounce in risk assets, is you do not want to be closing over the 70.29. You don't really want to be closing up inside the older hold either, so that's 70.14. You definitely don't want to be over 70.87 if we have some kind of massive dump in alts, tomorrow, and it pushes the price all the way up there. That would put it over the top of trends and range levels, and that could be very bearish as to what comes next. And that's 70.35 level, so which is the range level. So it's really just this whole area right here. There is just a multitude of support and resistance in here on the weekly, and the higher up you close into that, the more likely you are to continue up. And if we get some kind of Sunday risk asset pump, then this candle will come back down. But it really needs to get under this trend to be able to move down any lower. And there are definitely cases for why it should do that. So they include things like the break levels down the bottom here that have been hard closed but not retested. What it's got to do though is it's got to find some kind of diagonal resistance, diagonal resistance to actually send it down. So it could, like a perfect close setup for a pump in risk assets would be just a fractional close under that 70.14, because if it did that, so maybe 70.07, if it did do that for the weekly, it would be on the underside of trends. It would still be a yellow candle, so creating a topside resistance trend with a long wick. It wouldn't be making a hold level. It would break a prior trend for retest, and it has all these retest reasons down lower anyway. That would be the kind of close where you could expect them to be a pump coming after that. But yeah, anything up in the 70 plus area is just ultimately bearish for risk assets. Okay, so look at totals. Okay, so totals excluding stables, but including BTC, it looks like we got the answer to maybe reversed, which we put on there yesterday. So we have just pushed back down. So a little bit of a move up and then push back down to try and break the trend. We do have things like these really steep range trends in here, which could be targets for retest, and that's very bearish. It's definitely a double bottom, at least, if it did it in the next day or two. We do have supports down there, origin levels, etc., that could support the bottom of the range. In general, like what I am seeing here, which seems a bit weird, is, I think I said this on one of the other videos, is we kind of did this range and we swept the top. Not hugely, but we did sweep the top. And so maybe that is it. And this is it. We could be over for the rally. I think the comment I made in the previous video was that before we went up, we didn't sweep the bottom. And that's the kind of thing that sometimes you don't sweep the bottom because you get a lot of shorts that get trapped when the price is down here. and you want to liquidate them. So you push up and you liquidate the shorts. And if all those shorts have now been liquidated because of this price, there is the possibility that we sort of do return to the middle of the range and then, you know, continue to the upside. But there would also be a lot of longs that have opened, you know, in this sort of area here at least, maybe a whole heap of stop losses below here. So it also wouldn't surprise me if it's just game over already. And we have seen just some of these really, I guess I call them pathetic, weak sweeps, small sweeps, don't know, whatever you want to call them. This entire bear cycle so far, we have really seen like a few of these on various time frames where the sweep to the upside before the dump to the downside is just really minor. So yeah, who knows quite what's going to happen, but there's other little things in here that stand out. So number one, we are heading back into this range bracket here between 206 and 198. We're diving through the trend, but we haven't quite touched the 1.98 yet, so we might actually get a push in the next candle, maybe another dump to the downside, and then a push to test the backside of this trend again, or back up into the hold, or back to the top of the range level. Like they're all possible targets for the bounce of whatever it runs into next. But what you can clearly see is that it actually hasn't really run into anything. It's just the hold is rejecting through the trend, and it's kind of just in limbo. The next candle is the one that's probably going to be the one capable of having a bit of movement. Or the other alternative is that it is just going to push back up and reclaim this in the next 2 hours, which it absolutely could do, because it's not really a big candle in the scheme of what a daily candle can do. If you look at some of these bigger candles you've seen in the past, this thing is pretty much a nothing. So yeah, it could just be they're waiting for the absolute last minute of the day, get enough people to capitulate, and then push this thing to the upside. So yeah, all we can really do is wait for close and see how that ends up closing. All right, let's have a look at the weekly. So weekly has bounced between the range. Now, all we're really wanting to see is that this weekly makes a choice. It's either going to close under the trend, so continue dump tomorrow, close the week under the trend, which would be a break of trend because the body of this candle has started from under the trend. So if it closes down under that trend in blue, it's going to break that trend. Or we want to see it create a hold or close back up over any of these horizontal levels. So that's kind of what we're watching out for there. But to get really bullish, it's got to have a pretty big pump on Sunday to get bullish, because you're going to get a new interior resistance trend coming in. So like a perfect close level for the week would be sort of over that 211 or 212 type area. That gets it up inside range brackets, up inside resistances, back up inside prior broken trends, inside interior trends. That'd be a really bullish close if they shove it up there. And then you'd expect continuation up to the next resistance levels, which then sort of confirms the full move on the monthly range if we do that. So that's a maybe. We might be looking at a pump next week. Everyone's expecting a dump, so could happen. But it does need to have a good Sunday to be in a position to do that. And there's other various degrees of whether this could be a good close or a bad close. I mean, they could just do the ultimate troll, which would be a tiny little yellow doji below the trend, and then it's just a whole nother week of the same. I laugh, but it is kind of like algos have a sense of humor as to where they put the price and then what comes next. Yeah, or they could just close where they are now. No holds, new trend, no real way to break it for another couple of weeks, and but still with support, and that's just absolute compression if they do that. So, yep. Let's see what it's like for the riskier assets. So the riskier assets are looking to break trend. It's a little bit clearer as to what they want to do here, but you sort of want this to be back up over that 650.94. That would be quite a clear close. It means breaking a moving trend, but holding the horizontal level. in which case you could get a pump back up, to the next part of the range again, or back to the break level or the origin here at 668. Now closing under that level, but where they are now, puts it under a horizontal support resistance, breaks a trend, moves it to the bottom side and gives it support. So it's just, again, another one of those annoying closes that could happen. In which case it could push through that trend and it could tag this next support down at 634 and then bounce from there, or it could test the exterior trend and then have another bounce from there. But that exterior trend's already had its first touch and second touch bounce, so it's probably getting a bit weaker by now. So wait and see how that one closes. And the weekly's done everything the weekly should do. We're just looking to see that it creates at least a hold to the upside. There's one level still to test up there at 717, which is the broken origin from 10th of March 25. So it still didn't quite touch that last time, but it's done a complete move between the range brackets, and at this stage it's still holding trend. So a little bit higher for the week close would be good. And the other option, of course, is that they dump it on the last day, open the candle under the trend, reject off the backside of the trend, and head on down, which is we won't know for another 24 hours. Okay, let's have a look at Sol. So the 15-minute downtrend looks like it's created a reverse hold. It's pumped up off the reverse hold, if you can use the word pump on a 15-minute candle, and it's created a little range. It's trying to break the trend. Trends, plural, there's a heap of them in here. You got a range trend, you got various arrays of interior trends. There's a lot of resistance. But it is trying. Whether it can actually get out of here on such low volume in the next 2 hours is a whole nother story. So we really need to be closing back up over 85 if we want this to be any form of good close for the daily. But and I just look at this complete bird's nest of resistance and just wonder, is that even possible? Probably not without a tweet. And even then it would be some kind of pump that probably ends up getting retraced. But yeah, that's stuck under a lot of lines. So let's see what the hourly looks like. Yep, so the hourly is looking to recover the break. So it's come down into all the support. 8 minutes, if we've got a yellow candle there, we're recovering that break. But then we're still under the trend. Needs to be about another 30 cents up, which means it could open over the top side of the trend and then try to target the hold. But yeah, once again, only 2 hours, so it's got to then somehow get through the hold, get through the break, get up there to do the origin retest through the prior broken trend, and then, like I say, you really got to be over 85 to be more sustainably bullish. And to do that, it's then got to get through all of these levels at the top side here. So I don't know if we're going to see that. And yeah, the 4 hour. So if you think back now, you've got a 4 hour candle which is bouncing off a break level, and it has not quite, or it has done that retest. Let's see. 82, 230, 82, 215. No, so it hasn't quite done that retest. Actually, that was already done. I can delete that now. So we're bouncing off a break level. It looks like we might create two origins when this candle closes. So both of these break levels here and here from March the 2nd and March the 3rd have now been hit. The candle hasn't retraced back to either of them. If it but it is just grinding up so slowly, just simply because if you look at that lower time frame price action, there's just so much resistance in the lower time frame that it just makes this thing really slow to come back up. But the tricky part is that it hasn't actually retraced back to those break levels, which means it might be going to create in 2 hours, if it doesn't go back down, 2 origin levels down here, which could then be the means of actually bouncing. So, and the first break level at this stage is 85, but 84.736 will be a break level unless this candle can come all the way up and through that before this close. So even then it's still technically a break level, but it's just a massive reversal where it's closed straight back over the top of it. So yeah, just probably keep a bit of an eye on that. Need a soybean tweet. Okay, the daily is bouncing off trend. So it's bouncing off break level. So where this can flip bullish in the next 24 hours is if this closes just a little bit further up, stays and holds the trend, doesn't touch the break level, and then creates a new daily origin kind of in the middle of the range, that would be something that is signs that they've come down here, they've got people to capitulate, and they're looking to reverse. And that would be still probably a bit more of a slow bullish flip. If it was to be quite quickly bullish, then this whole candle just has to reverse, has to get back up above that trend that it's come through, which once again means more like 84.5 or 85 roughly to make that properly bullish in a short space of time. So, okay. And the weekly, I was looking at this when I first got up this morning. It just shows you how this week's just been absolutely diabolical. So is last week. Really, these last 4 weeks. Like, that's why if you're still here, well done. Because the last 4 weeks have just been a case of, oh, let's go for a dive. Nope. Let's go for a pump. Nope. Same thing. So we just want to see this weekly close recover this range level. If Sol can get back up over 85 and close the week, then it can open above a range level, above 2 trends, and then we can start to look at what comes next as far as retests of these upper broken levels and completion of some kind of bear market rally. Because hopefully it just, hopefully that 92, 93 or whatever we got to, just on 94, hopefully that wasn't it. There's still more things to retest. I think we just kind of ran out of time in the weekly candle and it had to pull back down under the trends. Okay, let's look at BTC. Oh, actually, before that, let's look at the high time frame stuff because there's heaps of it today. Okay, it's hard to even say where to start with all this. There is so much closing today, as you can see. We've got 25 different high time frame closes today. So let's say something's coming with all of that. Right. So if we just kind of look across here, what's happened? Well, we've had another rejection from that 89 level, and that was a 2-day origin. We've got a 2-day origin that was created down here at 76. So 76 is possibly where we might go. Even if we are going up, we could come down here and test this origin before we go up. What's happening at the moment is a battle as to whether they engulf this 2-day candle to the downside. And if they do, then, and that's any kind of close under 84, what was the low there? 84.744 is going to be capable of creating a complete 2-day range to the downside. But of course, that 2-day range is then going to run into that origin level, which could actually send it back up. So that's one of the things I'll be watching out for, is potential entries down around the 76 area. And depending on how the price structure moves, you'd target back to 84 through to the hold or the opening of the candle there, the greedier part of the hold, which is about 86. So that's one option. Now the other option, which would be a little bit more bullish first and then bearish, would be that we close under the 84.744, go up and hit that, and then come on down to the 79. And then the next option, of course, is that we close above that. Now, closing above that is sneaky bullish intention. If they actually do pump the price up above 84744 on the 2-day close today, then they are choosing not to create a range to the downside. And that's kind of what I would refer to as sneaky bullish intention. We've gone down, we've got everyone bored and capitulated. Crypto Twitter starts to flip to negatives again, and then they take the price up and they close above that level, therefore not creating the structure. And what could then happen is we could still push up into the hold, we can still reject off the hold, but the rejection may be more like just a smaller minimum obligation rejection, or they could push up and actually flip the hold and create a support at the upper part of the range to then move up and continue on with the upside price action. So yeah, there's a wee bit going on there. Right, now 3-day. Oh, there's a lot of these time frames. So once again, 3 days is going to make a choice. It's either going to close inside the prior hold, which it hasn't yet gone to its target. So the target of that hold that we are inside now is back up here to 91. And yeah, we haven't gone and done that. So potentially we do pull back up above that 85.8 before the end of the day and then go back up. The other option, of course, is that we don't go up at all and we close where we are, in which case we could create a minimum obligation move, which takes us down to 77. So you can see I've got it right on the line on the 2 and the 3 day here as to whether we break to the downside. But of course, any close over 83.569 is choosing not to make this hold. And that's a bit more, like I say, sneaky bullish if they do that. So 4 day. Okay, so break level rejection, pretty normal. Range trend. So we're going to get a range trend. Now, we're going to be on the wrong side of the range trend. So pushing up into 84, 85 at this point could be rejection. But if they close over 80, let's just say, yeah, it is pretty much 85. If they close over 85, then we're creating a range trend and we're on the top of the range trend. So you can start to see why 85 becomes such a key area across a lot of time frames today. So let's look at 6 day. Now 6 day actually already closed inside the hold recently, and it also created a range trend prior to that. So just imagine this 6 day, but in reverse, is kind of what we're dealing with now with the 4 day. So when we created this range trend on the downside, we managed to bounce off that range trend, push up, close inside the hold, flip the hold, and then we managed to push up and test these levels to the upside. So they were broken, or one of them we managed to get to, and we were able to do that, pushing through these broken origins. But because we're pushing through the resistance, by the time the candle closes, we come back down. So, what we're really looking for here is some kind of bullish close, and preferably, funnily enough, over that first broken origin, we want to be back up over 85. So 85 is just across the board a screaming number right now. Okay. There's really nothing to say about this other than it hasn't actually completed its move to 95.234 yet. Minimum obligation hold level could get created on the 12 day there. So but we are getting probably some kind of interior trend, which start from here, there. Can't wait for this thing to get auto trends. They tease me by showing me a picture of them. Okay, so there's our trend. There's reasons why the trend is like what you see there. If you've watched enough of these videos, you probably already know it. If you haven't, it's in the educational section about how to actually do trends properly. But this is sneaky bullish. You know, so creating a hold on the 12-day up over the top of the interior trend. The only thing that could make it better would be get over that break level, which is 84.373. That's the only thing that could make it better. And if we did that, we'd be on top of a trend, have a hold, and have an untested level to the upside of 95.234 and 98, etc. That's also untested, but okay. 14-day. All we can really say about this is we haven't tested the levels to the upside yet. There will be some kind of trend. Let's see if it's the same. Yeah. See, the thing with doing trends properly is you know that that candle is not part of it, and that's why that rejected so cleanly there. So that's which means this is actually the trend. This was a liquidity sweep, that whole thing, and that's our current trend. So we still have, even if price just continues to go sideways on the horizontal, you've still got, what's that, 14.28. Yeah, so we're heading up there. We've still got quite a few candles before we can run into that trend. Quite a few days. Now, if it does start to trail up and get closer to that trend, but so the only thing you got to really watch out for when it comes to level retests is, do you run into some kind of trend resistance before you actually get back to the level? And then does that trend resistance tell the price to push down and actually go to some other horizontal level to the downside? So at this stage, we've still got a lot of time. We could spend a lot more time down here. Or they could just hurry up and do something. Hurry up. Just want them to hurry up, right? We're all impatient about making money. What do we got here? 21-day, bouncing from the levels, hasn't retested the top side. Okay, this is possibly a little bit more bearish, but we might be getting a trend. So 28-day, let's see. So that was a prior broken trend, and it was broken with that one, which went there, got broken to there. See, that one was the one that got retested at that high. And then that was the local top. Just came to there. And you can see how we bounce. So just put these on there just for educational sake. You have, and you can't do this on TradingView. These timeframes you cannot find. So it's kind of why this thing is golden. So you break the trend, you move the trend, you close above the trend, you bounce the trend, you come back, you bounce off it again, come up here, test the broken trend, dump. So that's where we're at now. We move it to here. This kind of indicates a liquidity sweep, but it can't break the trend because it's on the trend, which means that the actual candle that breaks the trend is the one closing today, which is this one right here, right now. The trend shifts to the bottom side. The wick is long enough. We've got an untested horizontal level to the top side. If we open this and we dump into the trend, we'll probably end up bouncing back up to do the test of something up to the upside. I don't know if we'll come all the way back up there magically, but that is a target. If you're in the data CSV group and you look at the sold targets and you look at the minimum obligation targets, a lot of them are up here around the 130s, and that is actually a target. And there's more things that reinforce that the price could go there because of the way that this trend is getting broken. So that's possible. Okay, so let's look at 42. Yeah, so closing under levels. We've got the hold over here, which is a little bit bearish. It's too far down. Needs to, that 90. So there is resistance technically there around 90 because of that hold, but we are above the wick. So that's a little bit better. So do we have a trend? That one was broken here. Okay, so this trend is not getting broken. So we could come back up and test that. So that's where that's at. Sorry, I should say could come back up and recover that on the next candle. Or go down and bounce that one that was lower. So same thing. So as long as we stay above 77.5, we might actually end up opening the next candle and going to that 77, 76 area and then bouncing off that. That'd be like bouncing the wick of the control candle for the prior bear market range, and then you could head back up to retest one of these levels to the upside. So that's possible. And yeah, around the 90s will be the backside of that trend, but it's not technically capable of being broken today. So that was a break of trend. Yeah, so that one and there, it's gone. That's our trend structure. And nothing changes today. So it can move back up. It's not a break. And there's no new support trend though. So that's all we're seeing there. Oops, click. What do we got here? Okay, that's another hard close of the 125.919 break. So I don't know whether we've seen every single hard close of that level yet, which we can check. Beautiful. It's a break of trend as well. Moves to the downside. Wick is huge. We should be seeing something soon, eh? Whether we get one more dump and then a bounce, or whether we go up first and then reject down to continue the downwards market. But we definitely should be seeing something soon because we're moving some really decent key levels at the moment. So that's looking pretty impressive. Yeah, and there's probably a lot more going on too. There's so many closes today. I probably just can't really go through them all. There'll be a whole bunch of range levels. There'll be all that sort of stuff. And sometimes it's easier to look at this just from a view that's more like this. Let's see if I can get this thing to update. So rather than going through all the charts and looking at all the different range levels, sometimes it's just easier to come in here and go, are we creating any new ranges today? Which we will know in a sec. See. Yeah, so these are all possible ranges that are getting created today. And if we look at the levels there, got 84 to 79, so that would be a movement for the 2-day range. So what that's sort of saying is that if we hold above 79, then that's great. If they shove it down below 79, then they're just trying to be more bearish and they're going to try to create something in this lower bracket. If we get back up over 84.744, then they are actually looking to not create that range at all and potentially push back up into the whole candle. Then when we look at a bigger picture view of what's happening today, so straight away you can tell there's not any new ranges between 2-day and 49-day looking at that. So if we get above that, then we're going to create a new range on the 49-day where the top side's 97 and the bottom 64. So that's the kind of thing where we could sweep up or we could dump first and bounce back. These are the bigger ranges, and I'd say that the numbers that you're starting to see in here, which are becoming more and more visible across the closes that we're having, all have bottoms that are sort of around 40s to 20s. So that's probably where the bear market bottom will be, somewhere in that. But at the top side, we're also starting to create range brackets for these retests of things like break levels on other timeframes, which is that 125 and that 95. So if we do get a rally, these are the sort of levels we'd be looking to TP out. Then down here we've got candles closing inside holds. So if we close over these hold levels, then that's a little bit more bullish. So yeah, as you can see, there's a lot of ranges happening, but at the moment I think the main thing is, do we close over 85? If we close over 85, we're not creating this shorter term new range here, and that's kind of sneaky bullish. And then even if we do end up inside this range, that's just kind of to be expected anyway, that we might end up heading up to 97, and then once we get above 97, do some retests, or even 95. That could be enough, and then we could take a trip down to Goblin Town. So that's and the bigger picture stuff is definitely got some trend bounces that can get us into the 130s, and then yeah, if that happens, I'll just bring up the minimum obligation moves. Okay, so let's turn that on, filter that, and I made this column easier. Okay, yeah, so we got things like 88, which may have played out. This file's a day old, but probably not played out yet. And then we've got a lot here in the 130s. So it's a bit sneaky, but you're seeing today these trends getting shifted. And all it takes is for one of those trends to bounce or a broken trend to be retested before further downside. And in any of those scenarios, all of these minimum obligation moves play out. And there's only about 20 out of 500 of these that haven't played out yet. So it's pretty likely that the structure is getting created to complete the move. Right, let's have a look at BTC. Okay, so on the low time frame, I don't think you can really recover this to have any kind of significant close by the end of the day. We've only got 1.5 candles to go on the 1 hour. So we're below the break level. It has not technically hard closed this break level, so it could create a dirty origin if it got back up above and then the next candle didn't touch it. But that doesn't really give it the ability to have a significantly, explosive close to the upside. There's just too much resistance created above. Looking at the 4 hour, yeah, every single day they have done this. If you've watched, or if you're in the Discord, you'll notice I've posted a picture. Basically, last 2 days, they have trolled the close every single day. So they just shove it underneath resistance in the final either 1 hour or 4 hour candle of the day, and it just really stops it from being able to recover. It doesn't, the thing is, every time they do it, they're not breaking the level. They just don't want it to close the higher time frames at the better prices. So it's a way of restricting the higher time frames from actually getting any kind of decent close. And then the next day they can mess around within the day because the lower time frames haven't really broken. but ultimately the higher timeframes aren't getting the closes they need. So it looks like we're probably looking at the same thing, unless there's just a magic pump straight up through all those trends and levels in the next 1 hour and 37 minutes. Daily, so daily trend shift to the bottom looks like right on the line of whether it opens above or below this, and we're closing inside the hold. We're back in under the origin levels. So if this was to close just a fraction up, even 67,350 sort of price point or above will be above the new broken trend, and that could then send it up. But yeah, where they are now, they're doing what they typically do, and that's keeping it right on the line. So you don't know. It could drop 50 bucks, be under the new trend and reject further to the downside, or it could literally go up 50 bucks and be over top of the new trend. So yeah, it's a troll. Okay. What's happening on the weekly? So looking ahead to the weekly, we're just slightly below the origin. We haven't broken the origin. We're still above the trend. Just need to get out of this little wedge. We do not want to be in that for another week or two. So we just want the weekly close to be over 67,464 at a minimum. And then anything bigger than that would be really good. Like if we started to close in the 70K mark, then yep, you could trust that we go up and we do retests of these prior broken trends, and then we tick all these boxes we've been talking about for a while. But as it currently stands, they're not breaking it, but they're not giving it the closes it needs to move up either. So that's just 1, 2, 3, 4 weeks of annoying closes. Okay, let's have a look at the bigger stuff. Okay, so we still have an untested hold down here at 65. We've got potentially a new hold on the 2-day getting created if we close under 68,291. And if we close under the low of this candle, which is 67,360, so what are we at the moment? We're at 67,262. So yeah, if we close under the 67,360, then we could be looking to create a 2-day range to the downside. So that's short term a bit bearish. Now if we look at the 3-day, now we have a 3-day hold. The 3-day body starts at 67,447. So again, it's around that 67,400, 67,300 level. Anything around there is bearish, and that's where we are now. So if we wanted to get really cleanly up and out of this, we want to be up over the open of this 3-day. So that's about 68,194. Ignore these candle heights too. These are snapshots. They're not real time. So that's that candle currently is just down inside that hold, only just. So 4-day. So 4 days gone back under the range trend that it rejected off. So this was our 4-day range trend in here. So really, to get over that range trend, we need this candle to be up around 69, which is probably not going to be happening unless we get a magic short squeeze before the end of the day. So it is still holding the horizontal level. It'll create actually it won't create a range trend really. It's not inside the body of that other one. So let's look at the 6-day. So it's still showing a little bit bearish. Okay, and then the 6-day is the other way around. So now we're starting to see a little bit of bullishness on the bigger time frame here. We do have that range trend. And at this stage, we're up inside the hold unless we go below 67.043. So watch for that. Watch to see if they push it back down underneath this hold level or whether they close inside this hold level from the 12th of February. If they stay above 67.043 and we have still got the range trend support, this is looking a little bit more bullish. And being a bigger time frame than those other ones is more important. So 7-day. What would be a very tricky but somewhat bullish close would be a close today over 67.935. If we do create a hold here and we have got a range trend here, the range trend to test is up facing, and that then leads up to doing that $74,000 test, but it needs to really close a bit stronger than what you're seeing here. So something over that 67.935 could create that kind of Sunday pump. And staying over 67.043 again, important for the 12-day, because that's where we create that hold level. And there'll be a 12-day trend, which is most likely this one. Don't like dojis, but we'll see. Which will come to here. So as long as we stay up high enough, we could have a hold and we could have a trend, and the trend being up around that 70,000 mark. So that can get another pump up to 70,000. And if it goes through and touches the other one, which it could do, then that's again showing us that. So the higher time frames are sneaky. They're showing us that the lower time frames are looking bearish. But when you start digging into these higher time frames, a lot of them are actually showing hold levels. A lot of them are showing trend shifts. A lot of them are showing trade setups that create moves to the upside. So yeah, it's sneaky. Everyone's probably going to put sneaky in the comments now, aren't you? Yeah, not much to say about that. So we could be bouncing off something here. Look, we are. When you've stared at charts as much as I have, you just know that this looks like we're bouncing off a trend. So when you go down, you go up, and then you don't go as low again on the next one. It's normally because there's a trend. So this hasn't retested that 74 level yet. It's also a hard close of that 83 level. It's also a hard close of that 74 level. So there's a lot of things in there to go up and retest based on when this candle closes. And this will be an official break of these upper levels. So once you've got a break, you quite often have a retest. So that's something. Adds a bit of confluence. Meanwhile, they're pushing the low time frame price down as we speak to try and keep these closes as bearish as possible. Trolls. What's going on here? So that has not been hit. But we've already broken that trend, and it's now there. So we've still got quite a bit of support down inside here. It's all stuff that's moved around in the last couple of candles. Some of it's tested, some of it's untested. Okay. Yeah, and this is just like the 42 days, just an origin bounce. So it's tapped that 6145 it's sitting almost perfectly in between the level of 74,466 and the level that's creating the bounce. So we've come back to almost exactly the 50% mark. The question is do we then travel up to do the retest on the next candle, or do we not? And then we go down first. So that's we've got no downtrend to stop it. So let's see if we have an uptrend, eh? We do, and we're below it. So, and of course, the next candle has perfect confluence with retesting the upper level and the trend in the same candle. So that's once we go above that 74, definitely danger time. If we go above that 74. I don't think we're going to recover 70k by the end of the day, especially with the low time frame price action as we speak right now has just the fans are spinning up on the computer and the high frequency algos are just trying to shove it down. So it's looks like they're just going for good old bearish close as we get closer to close. 70 and 74, same thing. Haven't hit the break level yet. There'll be new ranges getting formed because of this whole candle. So that's okay. Now this one I posted yesterday. And the reason I posted it is because I made exactly that same mistake I just did then. So the trend on this actually starts earlier than it looks like. So we actually start back here because this candle is actually touching that trend. The anchor point for the first trend is actually this one from the 4th of July. Hey, 4th of July, 2022, which then takes us to there. And you'll notice that this trend was more adhered to here by the bounce, and it created the rejection here. So that's why it's really important to get the the fundamentals or the foundations of where a trend starts properly, which also means we break the trend today. So although this close looks bearish, and no matter how hard they try to shove that price down today, they've really got to get it below 62 today to actually make this a bearish trend move. So definitely I would be expecting something like minimum to go back to the wick, because they're actually, looks like they might be out of the hold as well. 66.755, yeah. So we're out of the hold. Unless they shove it down below 66.755, we're out of the hold. The wick, which can reject, is 70,063. Then you got the break level, which the price is below it, but it's not hard close, so it can always come back up above there. It would want to do that because you've got a trend that's getting broken, so there's a reason to retest that trend all the way to the upside, which completes every single minimum obligation move that there is on BTC if it comes up and retests that trend, and then it's just absolute goblin town after that. Okay, so this is potential of move a trend, go up first, dump down later, or go down to bounce and then come up. But once we exit this hold, there is a really high probability that we will move to the minimum move, which is at least 77,000. So just, yeah, this structure looks very sneaky, long-term bullish. Long-term meaning 77K. Okay. Most of this is just going to be more of the same. Yeah, don't think. Yeah, these really high time frames, they haven't actually lost or broken trends yet. So nothing really to see there. They're just good to know because you know that if at some point, if the price just went sideways now for what, 100, 200, 300, 400, 500 days, say it did nothing for 500 days, it's going to hit that trend. And when it does hit that trend, it's going to be back up here again. So that's why it's good to know that these things exist. Then you get ones like this, which are getting created for the first time today. So it's going to see where that candle's going to open. So as long as they keep it above 65 today, that trend's not a problem. In fact, it's actually below the price. Yeah, so a lot of this high time frame stuff is creating support. So it doesn't look too bad. You'd expect us to have that rally, even though everyone is bored, senseless, and giving up. Yeah, it's above trends. Ooh, that one's not. So this is probably the most bearish of the high time frames that we can see so far. Resistance between, oops. That one. So resistance between 74 and 96. And borderline on the trend at the moment. What's our current price? Yeah, we're literally touching that trend at the moment. So even $50 more to the upside, we're above it. $50 to the downside, we're below it. This we're probably below this trend, just. So with one like this, it's still showing that out of everything that we've got going, we still have some of the really big stuff that is going to open on or under the resistance. So whatever happens to the upside, we probably come back down. That one's more like 74 to 90. I guess we had to expect this, didn't we? Because this isn't going to be the bottom. Oh, what we got here? Okay, so there's an important number. 67,884. Do we close above 67 or below 67,884? Let's tidy that up. Okay, so below 67,884 in 1 hour and 15 minutes means wrong side of trend and hold level to the downside on a really big time frame, which roughly is about right for the whole bear cycle type thing. So what this is saying is that somewhere in that 294 days, we're going to see rejection of something up inside here, but it's not a range creation. So there'll be a whole heap of refined levels inside that candle that it could push up into before it comes down. And I would say that 70,000 being the backside of the trend is probably, or 70 by the time it gets to it, 71,000 maybe would be something around there, would be the absolute earliest of those. Once this closes, there'll be a means of actually seeing what kind of refined levels we have inside there. So I might do that after close. Nothing there. Not enough candles here to make a range. Nothing. 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 Okay, so short version. We have a bunch of things there where we're shifting support to the bottom. We have maybe one or two that are really high time frame bearish closes, and they indicate that once those lower time frame ones play out, the higher time frame ones are probably going to end up taking over, and then we go lower. So all we know is we know what we already know, which is we can have a rally, but it's a bear market rally. Okay, let's have a look at the ranges. Yep. So what do we see here? We see new ranges getting created, top side 75, bottom side 60, top side 80, bottom side 52, top side 73, bottom side 40, top side 74, bottom side 43, top side 74, bottom side 46, and a mixture of holds getting closed into, which basically says the price just doesn't know what the hell to do. So it's you'll notice these are opposites. So we're closing inside long holds and we're closing inside short holds at the same time. So it just doesn't know what the hell to do. And then everything else is pretty much older ranges. So just at a glance of the ranges that are getting created today and where price currently is, it gives you a pretty good indication that 41 is definitely on the cards at some point. So would 60. But we've got a really good chance that we go 73, 74, or even maybe 75, 80 if we do continue up and have one more little bit for this rally. So yeah, that's BTC. That's Sol. Let's have a quick look at these others. Actually, it's a weekend, so let's not look at all of them, but we'll look at some. Yeah, so Tesla is looking like it's just riding the line. Really, we just got to see how that opens for the week. MicroStrategy on the Friday there, it opened below the trend, but it's got an origin at 127, so it's probably going to go down and then try to bounce back up. It could just open the week up if Bitcoin has a bounce over the weekend, I suppose. Market cap for Sol, still under trend. Monthly is still pushing down. It's retested the backside of the trend. It's retested the range level. It's still pushing down. It's ages to go on the monthly anyway. 3 month has got way too long to go. Doesn't really matter. ARK finally got that entry. This happened while I was asleep, so I woke up this morning and noticed I had one less pending order, and then saw I had profit, so that was good. It just took a long time, but it's done. And when it actually executed, it was all over and done in 2 hours. ZEUS is still under the bottom of the range there. It's looking like it's inside the hold. It does have this daily dirty little in-range origin here. That could kick off a bounce. 91.01? Maybe. But then, yeah. No, sorry, what am I doing? It's a wrong color candle. It's got that one, which could kick off a rejection. Sure enough, it has. 97.66. Well, that would have been a short. They're down, but can't see any reason for that to recover at this point. Looks like it's gone through, hit the origin, or created the origin, close enough to testing the origin. OKX chart, talked about this yesterday, offsets and candles. Got to be careful with some of these exchanges. And it's created this filthy origin, and then it's rejected off it in this daily candle. So can't really see a reason for that to recover if it's going to close inside the hold. What's hype up to? Yeah, hype bounced between the hold, little origin and the hold. Looks like it's creating a downside range. So there is a daily hold down here at on hype at 28, so might be worth taking. Much lower risk would be if it dumps down into this backside one all the way at 23, but again, that's That's an if. It doesn't have to do that. So as far as ranging goes, it's got this, it's gone up, it's created this, it can do this, and it can continue up just off this. It can actually continue up just by closing over here, so over this 29, because it hasn't actually created a range off that candle. There is a distribution range created here on this one. So yeah, but even that, it hasn't really hit this 29 yet. It's trying to come down here and hit the break level, 26. So keep an eye on that. Looks like a pretty good token to scalp this, just some of these holds, the way they bounce. All right, that's us. Sorry, it's a bit of a long one, but there's a lot to cover off today. And yeah, I'll update all those data files and get them in the Discord. I might just update a set now and then do another set just after we close, just in case anyone wants to look at them before close. All right, we'll catch you again on the next one. Cheers.